All right, I think we are live, and apologies, guys, for being a little bit here late here this morning. I am up and running. I think our producer is out of the office right now, so I'm just getting everything set up on my end. Be patient with me. We are getting everything going here. We're getting everything set up. I just want to make sure we are good. Excuse me for being late. I actually did something that I have not done ever before today. And I'm going to probably, I don't know, maybe I'll mention it in my video today or something like that. But I bought some bonds today, like the most boomer, boring thing you could possibly buy. I invested in some bonds today. And honestly, half the reason was because it was really fun to do. You're just learning about bonds and we do this stuff every day, of course. And I do trade currency pairs. Most of my trading is indices and commodities like gold. But you sometimes, when you have, you want to diversify your account, bonds are an interesting thing, and I've only recently sort of really gotten into them. Anyways, welcome back, guys. We've got another big stream for you here. We are here for, of course, retail sales numbers coming out here today in just a brief period of time. And I will say, I think that today's retail sales numbers are like really very, very, very important because we had some stuff this week. We had PPI. I mean, we had a lot of stuff this week. We had PPI come out. We had CPI come out. Both of them caused the markets to stir, and the inflation story seems to be cooling. But today's number is, I think, abnormally important. Today, we are taking a look at retail sales, which you may not think is as big as, of course, like an NFP event or the interest rate decision. Of course, those are ginormous. But retail sales, in some ways, could be potentially looked at as like a leading indicator for, of course, situations that we are facing and the decision to raise or not when it comes to interest rates. Anyways, guys, as we get started here, we're going to take a look at some charts and we're going to prepare for this retail sales number to come out. I'll give you guys my take on everything. If you're enjoying the stream, hit that thumbs up button, and also do me a quick favor. Let me know where you are tuning in from. Would love to see where you guys are at and where you're watching the stream from. Usually we see people from all over the world. It's really cool. So anyways, I wanted to talk about, again, this retail sales number. Why does this matter so much? Well, the Federal Reserve needs inflation to cool. That's their very, very important role, is they want to get back to 2% in terms of inflation. We're still at 5%. Okay. Dre, thank you so much for the 2. Caught EU today. We'll take a look at EU very soon. Dre, thank you very much for the donation, my friend. And we will get to the euro in just a second. Let me go through this retail sales concept and why it matters so much first, because again, retail sales and core retail sales, especially, this is going to show us and show the Federal Reserve where retail is looking, where the consumers are looking. Are they buying? Are they spending? Or are they holding on to money? The Federal Reserve actually wants people to sort of be holding on to their money right now. They don't want money flooding the system because, again, they're trying to that worsens the inflation problem. They're trying to diminish that inflation problem. So it's a weird dynamic, but we are sort of the Federal Reserve actually wants this number to come down if it's going to, of course, continue to be on the cusp of no longer rate hiking. If we're going to see a pivot, we need retail sales down, we need inflation to keep cooling, that sort of thing, which seems to be the trend. And that's why the markets are preparing heavily for this event. Speaking of the markets, we'll take a look at, for example, our friend Dre donated $2 to the stream. Thank you so much again, Dre, for the donation to the stream. I appreciate that. When looking at the euro here, we're trading at 1.1060. This is a pretty impressive run up that we've had. Euro breaking back above that 1.1 handle, which is, again, a big impressive move there for Euro bulls. Anyways, if we take a look at like the lower time frames, if you caught this move, and it seems like our friend Dre in the chat, let's see, caught 1.09193, holding for 1.11. Wow, you caught a great move there, Dre. That's awesome. Yeah, I mean, if I'm looking at this thing, it does seem like it wants to keep running. And this is not a market that I would be shorting, right? When it's trending like this, absolutely no interest in trying to get in front of a train like this. However, I probably can't justify going long at these levels either, right? So the market's sort of already made its move. If you're being a technical trader about this, right? Pullbacks to maybe 1.096. And again, we'll see how the numbers come out here today for retail sales. But again, yes, we'll watch that. By the way, we had some people drop where they were tuning in from: Saudi Arabia, Dallas, Texas, India, Maldives, Ghana, South Africa, Germany. Cool to see everybody and where they are from. Thanks for being here. So am I going to buy the euro? No, I'm not really interested personally in the euro USD at this time. We will get into some things that I am trading. I am actually still long on that SPX500 trade. Things flying high on this one. I'm really happy with how this trade has turned out. Let's see if I can show you guys that trade. Got to unlock my trading account here. We're looking at SPY, and I am trading the S&P 500 long through my broker. We're up about $450, $440 on this trade. So nothing absolutely crazy, but a really nice move nonetheless. And actually, with this this recent move, let me get on the 4-hour chart. That's kind of where I really was paying attention to this trade. I've been swinging this one long, and when looking at the S&P 500, we are on the cusp, and again, retail sales will have something to say about this, of trying to break out here. It actually looks very promising to the upside. Now, of course, with the news, we will see the results. I'm not, one to try and claim I know what the news is going to be per se. But if the trend continues and we do start to see, retail sales doing what the Fed wants, maybe a slowdown and personal spending, that sort of thing, it's possible that this S&P 500 could continue to rally. Why would that be the case? Well, think about it. The Federal Reserve, in order to stop rate hikes and even potentially pivot and cut rates at some point, needs to see this economy slow down so that inflation can relax, right? That's the idea. So that's why we're paying attention closely to that here today. So again, we're looking at 4150 currently is where the S&P 500, for those of you who trade that with me. Anybody else trade? Let me know in the chat real quick. Do you guys trade the indices? Do you trade US 30, NAS 100, SPX 500, UK 100? You trade into the indices? Let me know. They are personally my favorite thing to trade. They have been forever. Is the S&P 500 is my favorite thing. I think it moves very nicely, moves clean, and we caught this trade inside of the group, which is awesome. So in fact, we'll have to see if we can trail a stop here today into profit. So that's where we're at. By the way, guys, if you're not familiar with the Discord channel, we do share all of the trades that we're taking inside of there. So recently I had a pretty great trade with the pound yen. Traded pound yen long, and then of course also my S&P 500 trade right here. This is where I entered into the trade and shared the full breakdown. So what we do inside of the Discord is not a place where it's just a copy service. We are not about that. I think that if you're going to be trading, genuinely, I think that if you're going to be trading, you shouldn't just be looking to copy anyone. It's a terrible way to approach this stuff. If you just want to copy stuff, you're just taking the lazy approach, and you should probably just, invest passively and do something else with your time. But if you're interested in this stuff and you want to learn this stuff, that's where our service comes in, because what we do is we share our trades, entries, and exits and all that sort of thing, but we share the full breakdowns, charts, explanations, why we're doing what we're doing, which charts we're looking at, which time frames we're focusing on. We share everything in full detail inside of the Discord channel. And if you'd like to access the Discord channel, we have a free version available. If you click the link here that's being dropped in the chat, we've got Chandler in the back office. Thanks for being here, Chandler, with us. He's going to drop a link for you guys. There it is. Click this link right here, and that's going to get you access to the free version of the Discord. And then if you decide you want to go for the premium version, that is also available, of course, as well. Guys, we've got just a couple minutes here before the retail sales number drops, which will have heavy impact on several markets. Of course, one of the big ones being gold, right? The gold market, of course, trades heavily based off of what the Federal Reserve is up to. And again, a lot of traders, what they do is they say, oh, Nick, I don't need to pay attention to fundamentals. I just ignore fundamentals and I just trade the chart. And I understand that, technicals can be very powerful. Don't get me wrong. But understanding the story about the US dollar is, in my opinion, super, super imperative if you're going to be trading the gold market seriously. Like if you're just sort of trying to scalp and play around with it, like, okay, do your thing. And if it works for you, who am I to tell you not to do that? But in my opinion, I think you need to be aware of what's going on with the Federal Reserve if you're really going to be a swing trader or even a short-term day trader, maybe not a scalper, maybe you don't really care, but scalping is, in my opinion, probably the hardest trading you can do. The spreads and commissions are really, really nasty and cut deeply into the cost. If my opinion, the most cost efficient way to quote unquote trade is swing trade to position trade. That is, in terms of costs with your brokerage, tremendously more affordable to swing trade than try and scalp the markets, which is the most costly way. You're losing money on every single trade just getting in and out. Anyways, that's another conversation for another day. Gold, like I said, right now the dollar looks very weak, and that is part of the reason why we have been so bullish on gold. Though today I wouldn't be buying up in these areas. My opinion, if we do get a discount today, if we get a pullback, there may be something to pay attention to. I do still like gold, possibly long around 2023, 2015, 50% retracement, something in there. We'll keep an eye on that as we go into the release. Of course, if we get some volatility, there may be an opportunity to find some pullback moves. But again, mostly interested if we get a pullback into some of those zones that we traded in yesterday. That is my take on it. Or was it yesterday? It may have been a couple days back where we were trading around 2021. So again, guys, we've got just over a minute here until the news. So what I'm going to go ahead and do is I'm going to start setting up my charts so that we can watch this together. I like doing the 15-minute charts. It's just fun to watch the reaction on a 15-minute chart. So I'm going to set up my charts really quick. So gold here, trading around 2037 as we speak. I'm going to put the S&P 500 in the bottom left, euro in the top right, and the pound in the bottom right. So we'll take a look and see how this market reacts going into the retail sales number, and then we'll have some coverage for you in terms of what the numbers have to say. USD tanked. If it's tanking, something's going on because market news has not even come out for the what is going on with the dollar CAD. Let's see. Dollar CAD moving a little bit. It has sold off, but again, the big move is in front of us, most likely, depending on what this retail sales number comes out. Again, we are expecting minus 0.4%. We'll keep an eye on the charts and see how the market reacts to the numbers here this morning. And here they come. Retail sales numbers should be printing here. Volatility picking up a little bit. Gold shooting up here. Wow, look at that. Trading up to 2040. Recovering ground real quick. Euro dollar also up. Pound dollar also up. S&P 500 lagging a little bit behind. Look at that. So big spikes and reverses here this morning. Wow, what a move. Look at that. Euro dollar traded. Oh, there it goes. Did you see these candles? These are crazy, guys. 16, 17 pips in profit, or not profit, in upside, and then erased it on a blip. Really kind of crazy. Let's see what the numbers are. Let's see if we can pull those up for us here. And we're going to just refresh this page, see if we can see what came out for retail sales numbers. Wow, guys. Wow. This is what, if nothing else, I would say that this is bullish S&P 500. And gold, I mean, really, minus 1% on the retail sales number here printing this morning, guys, and minus 0.8% on the core retail sales. This is showing, for those of you who are not familiar, this is the change in the total value of sales at the retail level. It shows consumer spending. And if consumer spending is down, why in the world would that be good for the gold market or the S&P market, Nick? Well, it's because, again, the Federal Reserve may be less likely to rate hike if the economy is slowing at a pace that they're not comfortable with, right? Rate hikes cause the market to slow down. This, in my opinion, looks actually bullish for the S&P 500 and for the gold market, and really just dollar bearish. But again, the market reacting a little bit differently here. It seems like the dollar has actually recovered a loss pretty quickly here, and the gold market selling back down. Like I said, I think that this is actually not obstructive in any way to my current trade on the S&P 500. We'll have to watch and see how this market reacts. Again, not a huge spike either direction, but still continuing to hold my trade in, and I would love to see this thing stay above this area of past resistance. In fact, for my friends in the Discord group, for the VIP members, we are going to be trailing stops, or I am going to be trailing my stop on this S&P 500 trade that I have. Once the market gets open here and going, I'll be trailing the stop further, and I'd like to let this candle play out a little bit, and then we will be trailing stops on that profitable position. So good spot to be in with S&P here this morning. And like I said, not a huge volatility spike, but I would actually say that what we just saw here was actually probably bullish for the S&P 500, and having perhaps a delayed response. That would be my take on this. Dollar, let's take a look at the DXY here. DXY down overall, big time on the 4-hour chart. A little bit of volatility on this candle, but nothing substantially telling. Actually, a little bit surprised because I would have expected that today's retail sales numbers would have been more volatile. Yes, you are getting some volatility, don't get me wrong, but not near the reaction that we got, of course, with like inflation numbers, CPI and PPI this week. Yeah. Yeah, no, Ascent, you're very, very correct in that. Complementary data in addition to CPI and PPI, well done. Thank you for that. And yeah, no, I couldn't have said it better myself. This sort of completes the trio of news that we got this week. We had CPI cool, PPI cool, and now retail sales numbers softer than expected, lower than expected. And that, in my opinion, actually looks possibly like a bullish case for S&P 500, because it means that the Federal Reserve may, just may, in the month of May, not rate hike. Or if they do, it is very likely to be their last rate hike. I say that cautiously, but it is very, very possible that their last rate hike is coming, and that a possible pivot could be in the works. So yeah, that is my take on this. Again, I am continuing to hold on to the S&P longs that I've got, and we'll continue to watch this. By the way, guys, I should mention, I mentioned it earlier, but let me remind you guys, if you want access to the Discord channel, we're sharing trades inside of there. We share analysis each day. We share educational PDFs that might be helpful to you in your trading. If this is something that you want access to, we have a free version available right now. You can click this link that's dropped in the chat. And Chandler, do you mind just let me know, do we have anybody on the, do we have any reps in the office to help out if we want to do anything like that? Just let me know if we do have that, either through Discord or in StreamYard, doesn't matter to me. But yeah, that would be helpful. So I am taking a look here at the S&P trade that I'm still in. For me, for those of you guys who are in the group, I'm thinking about trailing my stop at the very least up to this point. So my stop was below here. I might trail my stop to about break even, or perhaps even into profit there. So we'll keep an eye on that. Okay, cool. Thank you, Chandler, for that update. And yes, we'll go from there in just a second. Let's keep taking a look at some more charts here, guys. I want to take a look at the Edge Finder and see how's that GJ move doing. So yesterday, you guys know I traded GJ on the long side. I ended up getting trailed out for a profit. And I want to take a look at, since then, what has gone on. And let's go ahead and do that. So again, guys, I traded GBP/JPY on the long side the last few days. I made some money on this move. This was actually a really good trade for me. My entry was about here. Break, retest, and it shot to the moon there. And then eventually on this candle here, I actually ended up trailing out. So I took my profit at this point with a trailing stop. It was a really good runner. Ended up making about $400 on that move, which again, it's not a crazy profit, but it was a profit nonetheless. And at the end of the day, trading is not about one trade. It's about, many trades over many years is what's really going to move the needle, if you will. Anyways, taking a look here at the pound against the Japanese yen, I'm noticing that we're seeing some pretty good resilience here around this level of support here this morning. So this zone here, 165.70, may actually be a zone that I consider re-entering my concept. I mean, I was long on GJ. Perhaps I could be a little bit patient and wait for the lower extremes. If I'm being honest, I actually kind of like this 38.2. It is just below where, maybe many retail trader stop losses could occur. I'm not a big, I don't put too much emphasis on trying to play the retail trader stops. Quick little side note. Why not, Nick? Why not pay attention to where retail traders will put their stop loss? Because here's why. Retail trading, in the grand scheme of things, this is all the market liquidity, okay? When you guys realize retail traders make up like this much of the market, so this is retail and this is banks and corporations, okay? A heavy focus on trying to time where retail trader stop losses, to me, is pointless, because at the end of the day, big money is what's moving the market around. And they're not paying attention to the little amounts of money they could take from the retail traders. They're trying to fight one another, right? Businesses do not compete with consumers. They compete with other businesses. Think about it that way, right? Anyways, point aside, when looking at the pound yen, I actually do like the idea of trying to pick up the 38.2% retracement. Stops for me would probably go below the 50%. I would probably be comfortable with that. And again, looking for an expansion of this, trend just to continue. And if it does, it does. And if it doesn't, I'll take a small loss. But again, I have factors that I like to the long side here on the pound yen, and we'll take a quick look at the full chart so we can see. And again, this is the idea of me re-entering. So I made money on that pound yen previously. I'm looking to see if I can try and find another trade setup. Looking at pound yen specifically, we still have a buy bias. If we take a look at COT data here, let me show you guys something. So COT data shows us that in terms of institutional positioning, when we look at the yen specifically, the yen has a very heavy short perspective, right? However, you've got GBP showing a very high, I'm sorry, not a high, a sort of more mild view, 56, 57% to 43%. So it's kind of mixed. Anyways, when taking a look at the JPY versus the GBP, the institutional money seems much more biased to the sell side when it comes to the Japanese yen. So when looking at the chart, if we do get a pullback on this one, 38.2% looks very, very interesting for a long continuation play, in my opinion. So we'll keep an eye on that. And I do, like I said, I've already traded this once this week. I made some good money on that, and it is Friday, so I'm not in a rush, but if it gives me that price, I'll be very, very interested in looking at this a little closer. So GJ longs are an idea for me going into the end of this week, but also going into next week. So I do like it quite a bit. So yeah, and guys, what we're looking at here, if you're not familiar, this is the Edge Finder. It is our market scanning software. It pulls in all sorts of metrics. We can take a look at retail sentiment. So for example, when looking at GJ, the crowd, the amateur crowd, which does tend to be on the wrong side of trades, they tend to fade uptrends and fade downtrends, buy downtrends, sell uptrends kind of thing. They're right now very heavily on the short side. So that's notable as well. When taking a look at the trend, again, trend projection has a continued upside for us. And seasonality shows us that the month of April historically is a positive month. So what we just did, guys, we just danced around several different categories very quickly. We looked at smart money. We looked at retail traders. We took a look at seasonality. We looked at trend reading, and we can also look at the economic factors. GDP comparisons show a preference towards the UK. Inflation and unemployment favor Japan, but interest rates also favor the UK, giving us a long bias overall on the pound yen. So yeah, this is the idea. This is the idea behind GBP/JPY. We combine all these factors, then we look at the technical analysis. And again, a strong upward trend on the 4-hour and the daily chart looks very, very attractive, with the yen being very fundamentally weak right now. So I like it long. That's my take on it, and that's kind of how we work with it. If you guys want access to the Edge Finder, by the way, we are doing our 1-year celebration sale that is still going on. So if you want access to this, let me just take a second to remind you. So we have currently a lot of people who have signed up and are using our software. It gets you access to so many different things: our smart money tracker, our retail sentiment tab, bank signals, the seasonality, price forecasts, all sorts of good stuff. If you want access to this right now and you'd like to find out more, we are currently doing a 40% off sale for this event. But I have an extra, for those of you who are with me here live, we have an extra way you can get an even bigger discount. So we're going to drop a link in the chat right now. It's been put in here. So this link here, this is our limited time sale. We're doing 40% off, but if you direct message us, you can actually get a bigger discount. So what you do is you just click on that link that's in the chat, click tell me about your discounts, and it's going to connect you with one of my staff, one of our support reps here at A1 Trading. So if you want access to our software, this is what we do. We build software tools for traders. We are a software company in Atlanta, Georgia. And if you'd like access to our software, again, this is your chance. If you've been watching the channel for a while and you've been thinking about it, do not miss this opportunity. The price will not be this low for the foreseeable future. This is the biggest discount that we do all year. So that's why we keep talking about it. So don't miss out. If you've been thinking about it, tell us you're interested. Click tell me about your discounts in the chat link that was just dropped. Again, it is right here. click that link and you'll be connected with one of our team members here at A1 Trading. So yeah, I do like GJ long. Another yen cross that was on my watch list here was the Euro yen, and Aussie yen also popped up. Wow, yen crosses. Wow, look at this. We've got, this is actually news to me. When looking at the watch list, I didn't realize how many yen crosses are showing up. Euro yen long, pound yen, Swiss yen, Kiwi yen, Loonie yen or CAD yen. What a and Aussie yen, of course, the kangaroo pair, right? When looking at all of these yen crosses, how do you pick a favorite? Well, of course, you could just go Swiss yen as it is the most confirmed, but it also just depends what you like to trade. I really like trading pound yen and euro yen, both of those. I'm comfortable trading. Euro JPY, another one I've traded over the years. This one I do like, but it is probably a bit a ways from an entry. And again, I've been watching this level. I pulled up this chart. I had already marked it up for an interest around 145. Have not quite pulled back, but maybe something to watch out for next week. Blessing asked about the same thing. Blessing, yeah, I like euro yen long, but probably not at current levels. I'd like to see a pullback, and that would be that'd be more interesting to me. Gold tanking. So gold is a buy and a pullback, and if we get that pullback, I am interested. I mentioned earlier on in the stream here that this pullback, 38.2%. If this prints here this morning, 38 to 50% retracement, somewhere in this zone here. Let me highlight it. Hold on. So this zone, if we get into this area here today, guys, I will actually be interested in picking up gold. And look at this. As we speak, it may be interested. Now, what I like to do is I like to, when I have a trade, I take a few minutes to go do a write-up and stuff for the Discord when I take the trade. So if it comes into this level, I'll go take a closer look at it and take a trade. And if I do take that trade, like I said, with that sale that we are doing, we are also doing a sale on the Discord channel. So you can see, if you're a premium member, you get access to all the trade alerts that are going out. So again, that GJ trade that I took, etc. So with the gold market pulling back, I am interested. And if I take that trade, it'll go up in the Discord channel. Just what you do is just head over to Nick's Trades for those of you who are newer to the Discord, or if you do decide to join us, head to Nick's Trades and you'll get all the notifications for trades that I'm taking. Or of course, Frank, Ivan, etc., the rest of our team here. Speaking of Frank, maybe we could say hello to Frank, who is in the call. Guys, I'm going to watch this gold trade. We'll make a decision in just a second. Frank, what's going on, man?
Hey, how's it going?
Good. Are you watching this gold price this morning?
Yeah, so I'm watching a lot of things. Gold tanks, oil does the same. The initial market reaction was up for the stock, so I think it's just a confusing time. The initial reaction is never going to be reliable. So we're just
Because you
kind
had
of,
that on that retail sales number that printed this morning. You know, I actually thought that it was and maybe I'm wrong about this, Frank, but I actually thought that the retail sales number coming out much less than expected, -1% and then -0.8% on core. That's a big, much lower than expected. And to me, that signals, hey, the Federal Reserve, they don't want to crash the economy either, right? So like at some point they have to make decisions if they want to rate hike or slow that rate hike or even stop. And I feel like somebody mentioned it in the audience today. They mentioned that we had like the trifecta. We had PPI, CPI, and now retail sales numbers all show cooling in the economy. What's your take on that?
so I don't think that they're going to stop. I think what's expected is that they're going to hike in May. Um, They also said they could be followed by like an extended pause. Obviously, they don't want the market to crash, but they're also emphasizing that inflation's their number one priority still. So I think if anything were to happen, if any efforts are going against like a recession, it's to make it sort of a mild one, or what they call it a soft landing. But
Mm-hmm.
I don't think I don't think we're going to be able to avoid that necessarily, especially with this cooling economic data. We saw a beat in NFP last week, but it was still much lower than the month before. So retail sales are coming down. It's just overall like we're looking at contraction, and I don't think that the Fed is necessarily going to step in and start like cutting rates like some people say. I think
Right.
they're going to continue on the path, but maybe at a slower pace. And like if a recession occurs, like so be it in their eyes.
Yeah, and I think that it's the market would somewhat agree with you here today, as despite those numbers, we're seeing the S&P 500, still made pretty good gains this week. This is a 15-minute chart, and it did have a nice move up on those inflation numbers. But yeah, no, I mean this morning retail sales numbers did not have enough. It's kind of a weird one because retail sales, the stock market in some ways, if you think about companies, especially like companies exposed to retail spending, they don't necessarily want to see that number go down tremendously either. So retail sales, I feel like, is a tough one for in a high interest rate environment where they're trying to cool inflation. Cooling retail sales or hotter than expected retail sales, both of them are not necessarily like really optimistic for the stock market, at least
Right.
in my take on that. What do you think in terms of the other markets you're watching? You mentioned oil a little bit. Do you want to share your screen if you have any charts
Yeah.
that you're looking at?
Oh yeah, let me pull that up. Yeah, so I was looking at gold and oil. And like I said, gold, it has periods of consolidation, pulls back, and then it spikes up again um, when it's in an uptrend like this. And oil does the same thing. Right now, we're at this new period of consolidation on the 4 hour where things are just kind of trailing downwards and then followed by these big green candles. And right now, price is on, or it had bounced off support. So if you're looking at any long entries here, I would think this is like a good opportunity if you want to follow big money and see where they're putting their money to. So
Yeah, oil's been an interesting one to watch in that COT report as it has continued to be sort of a high on the list buy. Frank, I want to take over the screen for just a second to show you this gold move that we were watching just before you were hopping on. We were
oh
talking a little
wow.
bit about this. Look at this drop on gold. This is a really quick drop, and I had mentioned I was kind of interested in this zone here between the 38.2 and the 50%. But with it dropping like this, I've just got to be a little careful on this. Like when it moves so quick like this, I like to see it like pause, at least like calm down for a second, because
Right.
sometimes you'll look at a chart like this, you'll buy it, and then it will just drop way further, way quicker. So very interesting move there on the gold market. Why do you think that is? Why do you think it's selling off so hard?
Honestly, I don't really know.
Yeah, it's kind
It's
of
very,
weird. Like,
very confusing sentiment, I guess. Oil, same way. The stock market is also selling off. It's like they're all kind of correlated too, even though they're supposed to be opposite. Um, I think it's just looming recession fears, people not really knowing where to put their money. But then again, like if you just stick to fundamentals, like what's going on right now, um, like we're seeing probably an end to rate hikes at some point.
yep.
It's a clearer picture overall. We're not going to be as aggressive, according to Powell and the Fed. So
Yeah,
stocks are looking brighter, and then on the other side, oil, OPEC production cuts cause a surge in demand.
yeah,
And
and I
usually,
want to think in terms of what you just mentioned with rate hike forecasts, right? The thing is that when it comes to, by the way, Frank, I mentioned this earlier. I bought my first bond today, so you'd be proud of me just for finally pulling the trigger.
your first treasury.
I bought a treasury bill. I bought just a 1 year. Uh, 1 year, but just to diversify. And I was mentioning that just because we've talked about it for so long, but I might mention that in today's video. But anyways, going off of what you were saying about expectations for rates, we could actually take a look at the Edge Finder. We worked hard enough to pull this data up for, let's see if I can go interest rates. interest rates in terms of where things are headed, right? So right now, the U.S. is at a 5% interest rate. We're both sort of in the camp of thinking that there's a good solid chance that they rate hike one more time. I think that from there, that probably they might choose to pause there and watch the numbers and see how things go. But I think that it's very possible that could be the peak of interest rates. So we're probably looking at 5.25%. And then possibly a cool from there. That's kind of where we sit. And of course, for the currency traders out there, this number is the U.S., but this is why, people ask, why is the dollar strong or weak relative to other currencies? It's a lot of times because of something like this, where you look at Australia, which has, their interest rates are much less and less attractive. If you're a stock trader or investor, dividends are important, right? So dividends are how much you get paid to hold on to a stock. Well, it's similar in the interest rate world with currencies and bonds and things like that. The US is more attractive than most of the other major economies at this time. So that has been a contributing factor to the dollar. But as Frank and I are talking about, that trade is sort of going away with the expectation for rates to pause or even get cut. And then the last thing I'll say, Frank, in terms of that, we've got this on the Fed tracker. I'm curious to see what the latest in terms of interest rate forecasts are on this. Have you looked at this page anytime recently?
Yeah, so I saw, the forecast was 5.25. Honestly, I could see it going higher, but I think that could be over time. Inflation is still in their eyes like a bit concerning. They said there's more they can do, and that could be another 25 basis point, or it could be a couple more. So we'll
Yeah.
see. It all depends on the data, but
Yeah.
as well, I was looking at gold, or what could be causing the gold sell off. And when you mentioned you bought bonds, and I checked the 10-year note.
Oh, my timing was awful.
bond,
I should have bought it a little later.
bonds are definitely on the rise, so that's bringing value to the dollar, and probably what's sinking the stock market and gold as well. So
Yeah, no, that would make sense. And I was going to mention that with the dollar trade, and I'll show you this real quick on the dollar chart that I had pulled up. So the dollar popped here this morning. My take on this, Frank, is I'm not overly bullish on the dollar. And in fact, I think that this was probably a necessary pullback after all this movement here to this week. I think that you probably saw a good chance of any slight reason to rally. The dollar probably wanted to. So now we're seeing what I think is probably a good healthy pullback down to back to like 101.5. From there, I'm still technically sort of bearish on the dollar. I think the chart still looks pretty weak, and it would make sense in the sense that, like what we're talking about, rates are sort of expected to again at some point pause or even get cut. And like you mentioned with the 10-year, that popping here a little this morning as well is going to have positive impact on the dollar. So rates are a very interesting market to watch, and I know that they're not very, in terms of the Forex world, most traders do not pay attention to them, but they're a very important market. Yeah, Frank, the last thing I wanted to say is you were pointing out this chart has us at 5.25% as a forecast. I thought this was interesting that sort of on the forecast, they do actually have a rate hike. I'm sorry, a interest rate decline of down to 4.75% by the end of the year. What do you think that's a what are the odds that happens? Do you think we get a rate cut by the end of the year?
by the end of the year, no, I
You
don't
don't think
think
so?
so.
Okay.
Um, at least that's not what I'm hearing.
Yeah.
Um, I think 5.25 was the goal at the end of the year. And 2024 would be when they decide to keep it there or cut. So I think I think we're going to be probably a little higher in rates going into Q3 and 4, but I don't think we're gonna cut this year.
Fair enough. Yeah. I mean, I think that's where I might diverge a little bit with you. I think that there's a possibility, but maybe that's just me being hopeful. And markets can be ruthless. So I think that my take on it is I think we hike maybe one more time. We pause. We let that inflation curve continue to dwindle. And if there's any signs, especially if you get like fears around the banks and that sort of thing pop up again, think it is possible that a rate cut, and I would like to see it. It would be cool for the stock market. And of course, I'm wishful thinking, I guess, for some of my own investments. But anyways, Frank, thank you for coming on. I feel like this was an awesome session. And as always, your commentary is super helpful to the audience. Every time I get on here, Frank, nowadays, I can't get 10 minutes into my own stream without seeing somebody say, "Where's Frank? I want to hear what Frank has to say." So I got to also tell you, actually, last thing before you go, Frank, I messed up. I bought a bond for Macy's, like Macy's, the outlet store, right?
You got corporate bonds?
Corporate bond. And I was playing around, and I'm so new to bonds. I don't know what I'm doing on there. I'm playing around with them, figuring it out. And so I bought Macy's bond, a corporate bond with Macy's, and it was offering 8.5%. I was like, wow, that's pretty dang good. But then what I realized, Frank, is that the expiration, or the maturity date, was 2037. So I was like, okay, no. I don't really want to tie up my money for that long. So anyways, I had to sell it back to the market really quick, but it was just a funny mistake. But you live and you learn. So it was fun as always. Lewis says, very interesting to hear what Frank says, and it's peaceful. Yes, I think that's what you're saying. I can't really understand that message. Anyway, Lewis, thanks for the commentary. Frank, thank you for coming on as always, and
it was a lot of fun.
We'll with you tomorrow, or thanks. I guess Monday. See ya.
Sounds good.
All right. Yeah. So as always, guys, we love having Frank come on. He's if you guys don't know, or if you couldn't tell, Frank and I have been friends for a very long time, and now we work together. And it's been, I mean, we've done stuff together, business ventures, trading together for the better half of a decade now. So it's always good to have his commentary, and awesome to have him on. When the CPI number came out, how did the S&P have a bearish momentum? Shouldn't it be an inverse proportion? CPI numbers came out, and I believe the S&P 500 rallied. Yeah, we had a strong reaction to the upside for inflation numbers. It was because inflation cooled, which was great in terms of the Fed's goal, right? The Federal Reserve wants inflation to cool. If that happens, they'll stop rate hiking. That's the idea. And that's why stocks rallied this week. And we've continued to be long. Again, let's check on the position here. We've given back a little bit of the profit. We're up about $388 at this time. It's a small trade, but again, I was hesitant with the sizing because, despite me liking the trade, the S&P 500 has made a good move here. And I don't necessarily, I got the pullback, but I'm not necessarily super bullish at the highs kind of thing. I am looking for pullbacks to potentially build, take this trade, maybe make some money on it. But I'd like to see a deeper pullback in order to get a little bit more size, in my personal take. Last thought on gold. Yeah, let's take a look on gold. Good question. Okay, we got a little bit of reaction here. Nice little push off this level, and I think it might be a trade here for us, guys. I actually like this gold move here a lot. And do we have a guest coming on, Chandler? Let me know. Let me see. Oh, Kenzo had to cancel. No guest. No problem. Thank you for the update on that, Chandler. So, guys, I am actually going to take this trade gold long. I like this trade. And what I'm going to do here is we're going to, can I take it? Nope, the market's not open for the stock exchange here, which is what I trade on. So I'm gonna have to wait, but that's okay. I don't mind waiting here on the gold market. I'm watching this candle. We had a nice reaction here. If we stay in this zone here today, I'm gonna pick that trade up. I'm not too phased about that, because again, taking trades directly on the live stream is very stressful, because I have to do my whole process, and then I have to rush it because I feel like I'm on air. Anyways, yeah, I mean, this gold market, if it stays in this zone here today, guys, I will take that trade. For those of you who are inside of the VIP group, I will be taking it and sharing it within the Discord channel here. If you guys want access to this Discord, let me do something real quick. I'm going to show you how you can join us today. If you want to come trade with us, again, you can meet Frank and myself. You can send a message to Frank. He's in there all the time chatting and working with traders. If you want to hear his commentary, see my trades, see his trades, see Ivan's trades, all of them are available within our Discord community group. If you want access to this, here's how you can do that. So we're going to drop a link in the chat here. It's going to take you to where you can have a direct conversation to one of our support reps. So click this link. It's right here. Click this link. send us a direct message. It'll open up a chat box that looks like this. Click tell me about your discounts. We are doing right now our biggest sale price of the entire year, and I don't want you to miss it. So click that link, come join us. Would love to meet more of you guys in the Discord setting. We have chat rooms available, coaching webinars, and so much more. So if you want access to that, click this message or click this link. It'll open up a chat icon, and you can ask our team about the Discord channel where you can get access to our trade alerts and everything else. So yeah, I'm going to be patient on this one. I'm going to wait probably 30 minutes here. Watch this. I'm a swing trader, so I'm not scalping or day trading here, and I'm not in a rush as it is Friday. If the trade comes, it comes. If it doesn't, I'll wait till Monday. But I do like this gold pullback. I think it's interesting, and yeah. So there we go. Of course, we'll keep an eye on that one, and maybe we'll have an update for you guys in the video today. Thank you for tuning in to the live stream. That's going to be it for us. Again, come join us in the Discord, and thank you all for being here. We will see you back on Monday. Thanks for watching.
And guys, before we go, I want to remind you about ACAP, our sponsor for today's video or stream. I want to talk about ACAP for a second. Let's see, I got the thing that James usually says. I don't normally do this, so give me a break. ACAP it's award-winning regulated broker. It allows traders the best experience there is. If you choose to trade with ACAP, you'll be able to trade CFDs like gold, Forex pairs, cryptos, indices, and more. Let's see. Additionally, their spreads are razor thin. They offer up to 500 to 1 leverage, and their customer support is top-notch. One very cool feature is that they've recently partnered with TradingView.com, meaning that you can do all your trades directly on TradingView. If you're a super fan of the channel, ACAP's partnered with us. They offer A1 Trading followers a free copy of the Edge Finder if you open an account with $1,000 or more. So how about that? That's pretty cool. You get an Edge Finder Basic if you deposit $1,000 into a trading account with them. So you can click the link that we have. We have a description link in the description. You can click that and check that out. ACAP's the best in the business, and that's why we're proud to have them sponsored with us. And we always get this question. If you're in the U.S., you can't use it. But if you're outside the U.S., ACAP. There you go. If you're in the U.S., OAN is a pretty good one. We also have a seminar sponsored by OAN coming up in Atlanta, April 22nd. So, you know, if you can beat at that, meet us in person. Anyway, we're going to end it right there. Let me get out of y'all's hair. Goodbye, everybody. Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember, if you open a $1,000 or more trading account with ACAP, you'll receive a free copy of the Edge Finder. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.